Nieces, hello nephews, it's your Uncle Chartist here, and welcome back to my YouTube channel where we do unbiased technical analysis. But today I'm going to show you how Uncle Chartist enter and exit trades using the 15-minute chart and his daily support and resistance levels. Okay, I went to a random date. In my Discord, I have a room where I put my support and resistance levels for SPY, VIX, Dow Jones, QQQ, IWM. This was back on August 10th. Okay, the date's right there, August 10th. And I looked at the support and resistance levels. Okay, so I went back to SPY and added those support and resistance levels. Those are what all the lines are. Okay, all these lines are support and resistance levels on the SPY that I put out for August 10th. And like I always say, Uncle Chartist's style or strategy is to long breakouts of resistance and short breakdowns of support. And I just play it level to level. I don't chase home runs. I just play it level to level. All my levels are based on the daily chart, but I use the 15-minute chart to trade intraday. So it's August 10th. This is the 15-minute chart. All the levels that I mentioned on my Discord are added right here on the chart. Okay, I'm gonna press the replay button. It's gonna play out. Then I'm gonna tell you if I would enter or when I would exit, when I would cut loss, all that good stuff. Okay, and I'm gonna tell you why. Okay. So before we even start, you can see on August 10th in the pre-market, I had some levels down here at 415, and 413 and 412. And we can see something happened that morning. I forgot what it was, but something happened that morning that caused a big buying pressure. Okay, and it cleared this 416.5 to 417 zone. Okay, I had that right here, 416.5 to 17 zone. All right, so we're gonna play. Okay, so boom, market open. All right, market open on this candle. This is the 930 candle, and the open for this candle is 418.7. So what do we do first? The first thing we must identify is the first resistance and the first support level. Okay, so at 418.5, first resistance is up here at 420. All right, that means the first support is at 418.5 with 417 to 416.5 below that. Okay, that's the first thing we got to do at market open is identify where the most immediate support and resistance levels are. Okay, now it just dropped all the way down very close to the 417 level. Okay, would I have bought that? Maybe, but it depends how fast it was. Okay, because we saw that 417 level get broken out in pre-market. Yes, I do watch price action in pre-market. I do consider the context from pre-market. So this is a breakout. So if it did come and test that, that would be the back test and gold strategy, where it back tests the breakout level and back tests it as a support to confirm an upside. But we need to see buying pressure, and you can see here there was buying pressure. Would I have entered longs there? Probably. Okay, but if it happened too fast, I probably would have missed that, and then I would have waited for this 418.5 level to clear on the 15-minute chart. Let's see what happens. Okay, so yup, you can see here that 418.5 broke down. So technically that is a breakdown that you could have shorted, but you would have shorted down to the next support level. Okay, because that was market open, I probably would not have entered that though. Or maybe I would have, but in this case I wouldn't have because it's too early in the morning. Okay, still rejected from that 418.5. Okay, so I'm gonna make this a tad bit faster. Okay, so with me seeing 418.5 getting tested like that, that shows that there's two things that I'm seeing. It's basing under a resistant level. Okay, so for me to want to enter calls at this point, because I'm seeing it's basing under a resistant level, I need to see it clear 418.5. However, it's still defending 418.5. So for me to trust it, I need to see the 417 to 416.5 zone break on the 15-minute chart to enter puts. Let's see what the market decides to do. Oh, look at that. You guys saw that? Did you guys see that? It broke down and it tested the support. We did not lose that support. For me to consider this support lost, it would have to close under the 416.5 support on the 15-minute chart. Instead, we got buying pressure. Would I have entered calls there? Yes, I would. This one, I was a little skeptical because it was first, the market just opened and it didn't hit my support level. This one hit my support level and it showed buying pressure. You can see that wick. All right. So the idea behind that, if I was to enter, I would want to try to enter in that zone. Okay. That's why we have to identify our support resistance level and know where we're going to enter in the first place. But let's say I did miss that. Let's say it happened too fast and it bounced. I would still enter that maybe around as close to 417 as possible. Maybe 416, 417.5-ish. I would long around there just because I saw buying pressure. Your entry doesn't always have to be perfect. All right. But I would definitely have entered calls there if I was able to catch that. Let's see what happens. Boom. Okay. So you saw what happened. Boom. So I said I would enter calls here. That's based off support, based on the back test and go strategy. We cleared it in pre-market. We back tested as a support and it showed buying pressure. I would have entered calls there. But look what happened on this candle. It hit the next level. Remember, Uncle Chartist plays it level to level. So the calls that I would have bought here, I would have took profit at the very next level. Okay, and left the runner. Now also, notice where this candle closed. This candle closed at 418.55, just above my 418.5 resistance level. I would consider that clearing my resistance level on the 15-minute chart. So I would either hold my runner longer or I would enter calls right here just because it cleared my 418.5 level. Let's see what happens. Oh my goodness. Okay, great. All right, so you saw what happened. All right, we cleared the 418.5 level. I said I would either enter calls there or I would hold my runner. And then the next candle, yes, it did wash below. This is where a lot of people get confused sometimes. Look at this. This is a 15-minute candle right here. You notice on that low, the low is 418.39. But I have my support at 418.5. But look at where it closed. Did this candle close below 418.5? It did not. Therefore, it did not lose the support. If this candle would have closed below 418.5, I would have cut my loss. Okay? It closed above it on this candle. It washed below it, but it did not close below it. So therefore, I don't count it as cutting my loss. I would not have cut my loss there. I would have held. I would have only cut my loss if it closed below 418.5 on this candle. However, it held. And look what happened. It hit the next price target. There, if I entered calls here, I would have taken profit here and left the runner. If I entered calls here and left the runner here, I would have moved my stops up. Okay? Or I would have just taken more profits there. Does that make sense, guys? That is where I would have took profit. But look, selling pressure. Let's see what happens next. Okay, so 418.5 is still holding. I got my support, my stop loss under there. Okay, that's when I would cut loss, but it has to close below. Look at that. You see, that's where it gets tricky again. You notice how that candle dropped below it, but it did not close below it. Would I have cut my loss there? No, I would not. Let's see what happens. Still going. It's chopping. You see, you guys see why I would not have cut my loss there? It did not close below that support on the 15-minute candle. If anything, I would have entered calls there and you see it would have worked out. But no, I would not have cut my loss there just because we washed below it. Because it didn't close on the 15-minute chart, I would not have cut my loss. A lot of times we put our stops too tight and the market makers, they go hunt those stops. Oh, look at that. Notice that? Okay, so this candle right here closed at 418.5. It literally closed right on my support level. Would I have cut my loss there? No, I would have not. I would not have cut my loss there. Why? Because it did not close below my support. Does that make sense? I think I said that about 5-6 times already, but no, I would not have cut my loss there. Boom, look at that. Look at that. Oh my goodness, look at that. Holy moly. We just cleared my 420 target. All right. So if we remember, we said we would enter calls at 418.5 clears. Or you can use the back test and go strategy. After it clears, you want to see it tested as a support for entry. You see here, it tested that as support twice, here and here. Those were two good entries. All right, to play it level to level, and it hit the target. It cleared 420. What would I have done here? Let me see. If it cleared 420 on the 15-minute chart, I would have looked for calls, or I would move my stops up on my runner. But I would definitely look for calls here. Let's see how it worked out. Okay, so I said I would either look for calls here or I would hold my runner. Now you see on the next candle, this candle right here in the 15-minute, I would have cut my loss there. There I would have cut my loss. This strategy is not 100%. If you see, it cleared 420. Okay, enter calls. But then the next candle, it closed below 420. I'm out. If I had runners from 418.5, at that point, I would have got out. Does that make sense? So you guys starting to get it, guys? We play it level to level. We buy the breakouts of, resistant, and we try to short the breakdowns of support. In this case, we didn't really have a breakdown of support, but I hope you guys understood it a little bit better.